he was the big bull, but he was also the big bear in the initial part of his journey. During the Harshad Mehta days, he was the big bear. And when he was trading, so he was simultaneously trading and simultaneously investing. So in his trading activities, he switched between bullishness and bearishness at will.
And I believe this is the best way for anyone to start investing in market, and it has rewarded me. I started investing in index funds. I have been investing since 2014, and I have made more money than what Nifty did in that period, because I would invest some extra money on days when market crashes. So that's how I've built on my positions. So it has rewarded me. So I would advise everybody to do please invest in Nifty index fund. Your
I always try to, I always say that, asset allocation is like your lunch thali, it should be balanced. आपके पास रोटी होनी चाहिए, दाल होनी चाहिए, सब्जी होनी चाहिए. It's not just आप पूरी lunch की थाली में दाल ही खा रहे हो सिर्फ, right? Which was what I did. Okay.
Hello friends, I am Ankit Kanodia from SmartSync Services, a SEBI registered investment advisory firm. Welcome to Mission Smile. For those who are joining for the first time, Mission Smile stands for Making New Stock Market Investors Learn It Through Engaging Research. Before we begin, I would request everyone to please keep yourself on mute and switch off the video so that we can have a seamless discussion. You may type in your questions on the chat box. In the end, we have scheduled time for your questions too. So let's begin. Today is not one of our regular sessions that we normally do. It's a special one. Between the pages, as you can see on your screen, between the pages with Neil, Aditya, and Aprajita, the authors of the book, The Big Bull of Dalal Street. And this session is a tribute to arguably the best investor in India, Mr. Rakesh Jhunjhunwala. I would start with what Shankar Sharma wrote on the cover page of the book. They don't make investors like Rakesh anymore. He was special, a rare combination of chutzpah, skill, and luck. Let me now introduce the three guests, the authors of the book, starting with ladies first. Aprajita Sharma. She is a financial journalist who has worked across diverse media formats from digital and print to broadcast. She now freelances for Mint, Fortune India, Outlook Money, and a few mutual fund houses. She is also a certified financial planner. Thank you, Aprajita, for coming to our
thank you for inviting me. Pleasure to be here.
Next up is Mr. Neil Borate. Neil is the deputy editor at Mint, who needs no introduction. He's fairly active on Twitter and LinkedIn with some fantastic pieces on personal finance and investing, and especially on current issues related to investing and personal finance. In fact, I'm sure many of you who are attending the session today would have seen yesterday's tweet on the RIA regulation, which Neil posted on his timeline. And all these tweets are very, very, very important for all investors in the community. So thank you, Neil, for joining us.
Thanks, Ankit. It's a privilege to be here.
Thank you. Next up is Aditya Kondawal. Aditya is partner and VP of key accounts of Complete Circle Capital Limited. He is known for his tweet threads on IPOs and other stock market ideas. I know him through Twitter only for last 2-3 years, I guess. And our meeting is long due. Maybe we'll meet soon. Thank you, Neil, Aprajita, and Aditya for agreeing to do this. And a special thank you to the audience who have joined us today on a weekday. And I'm sure many of us will also watch the recording of the session when we'll upload it on the YouTube channel. So let's begin. This question is for all three of you. Let's start from the beginning. How did the idea of writing a book on RJ germinated? And what were your initial groundwork and preparation? Neil, if you can start, and then followed by Aprajita and Aditya.
So there are two big reasons why we wrote this book. There is a deeper reason, which is that to us, Rakesh Jhunjhunwala symbolizes the idea of a truly successful Indian investor, the India story, in a sense, you can say. And I mean, there is no bigger story to write. On a practical level, we decided because Rakesh passed away last year, and there was no better moment to begin. I mean, his life journey was something that almost screamed to be written about, and we decided to pick that moment. So that's the more practical reason why we began this book at this point of time.
And what about the initial preparation? What did you do to make this book see the light of the day?
So it's quite interesting because on the one hand, there is so much information about Rakesh. There is tons of videos, tons of newspaper articles. We had to sift, we had to spend hours sifting through all of that data. On the other hand, the circle around him, his family, his friends are very close knit. They do not talk. We tried really hard. We eventually got to talk to people who he worked with, usually off record. They didn't want to be quoted. So it is very difficult to break into that circle. And to the extent possible, we did it. So we combined these two things to bring out the book. And there's a third element to it, which is the personal finance lessons from Rakesh's life. Some of it is the advice that he himself gave to retail investors, and some of it comes from our interpretation of what you can and cannot follow with Rakesh.
Aprajita, any special or anything particular which you did to?
Yeah, so this is exactly how we planned going about it. So initially we did want to focus on Rakesh Jhunjhunwala as a person and stories that are not out there, something very special and unique about him that is not known to larger public. That is what we wanted to bring out, but obviously we could not have wasted our time. So simultaneously we also started watching all those videos, old interviews, old articles, and started culling out key information that we would want to put in book. So that was happening, and meanwhile we were trying to meet different people and understanding about him as a person. What was he behind the scene? Is it behind camera and behind all those interviews and articles that were written about him? So that's how we approached.
Right. Aditya, anything else you would want to add on this?
I mean, Neil and Aprajita have given the context on why we chose to wrote the book and how we started actually. And one thing that all of us consciously took the decision was that we tried to really simplify the book, the story, his hits, his misses. We wanted to really make this book accessible to everyone. So I still remember the very first meeting that we had, right? So we were just discussing that who's our target market, and I believe one of us said that it should be the whole Indian diaspora, not just the investors. So one thing that we tried to do was simplify everything because RJ's story is something that should not be just told to market investors but to the Indian public at large. We need more investors. We need more people coming in, and yeah, I think that's one thing that we did, and we are very proud of, because from whatever we have heard, the initial reviews that we heard was that people who are not really related to the stock markets have picked up the book, and like you said, have binge read it. So I think as an author, there's no greater feedback than that. Yeah.
Great. So before diving into the questions related to the book, I just want all three of you to give just a flavor of how do you think about RJ, the investor and human being, from your own, because you would have researched and as you mentioned, you have studied a lot about him. So if I ask all three of you, what is your, maybe we'll start with Prajita this time.
Yeah. So for me, RJ is an extremely confident person, someone who is way too unique, way too original in his or her thoughts. He is a leader. He is not at all a follower. So he will do something only because his mind has asked it to do it. Otherwise, he would not follow anybody's advice. So and apart from it, Rakesh Jhunjhunwala, what struck me, so while I was speaking to different employees, so I would like to share one story that around 2007 and 8, when stock market crashed, and so he had a large portfolio, and little bit portion different investors, different colleagues, different employees would do it for him. So that day market crashed, and Rakesh Jhunjhunwala lost a lot of money, and obviously those employees will feel bad that they lost money. They lost Rakesh Jhunjhunwala's money, so they were really very sad. And all very disappointment everywhere and sad environment in the office. So Rakesh Jhunjhunwala was the one went to everybody and said, are you guys so sad? I am not sad. It's my money and I'm not sad. Why are you behaving like that? And he tried to encourage them that such things keep happening. You don't have to get bothered about it and just let it pass, and it will, and gradually things will start turning around. And that is exactly what happened. So he tried motivating those people, those employees, and that was a very prominent incident in that employee's life that he shared with me. So this is something very interesting, that it was his own money and still he tried to encourage those people. He did not scold them. So I really like this aspect about him, and his confidence I already told you, and he would always help people around him. So it's not that he'll keep his stock ideas to himself. He'll try sharing it with different people. He would want other people around him to also make money in those stocks. So he would suggest those ideas. He would not keep it to himself. So that is again very interesting, because not many people do that.
Yeah, that was a very interesting story, and I remember you wrote that
Yeah, in
in
the
the
book.
book as well.
Hmm.
As in, he wants to make money, not just himself, but also he wants to make sure that others around him also make money. Plus, he also highlights this fact that it's fine if you're doing a mistake. It's just that you don't repeat the same mistake.
Yeah,
That is
accept
also
your
something.
mistake and move on.
Exactly. Right. Neil?
So there is this saying about India that everything you say, the opposite of it is also true. You can apply that to Rakesh also. So, he was the big bull, but he was also the big bear. In the initial part of his journey, during the Harshad Mehta days, he was the big bear. And when he was trading, so he was simultaneously trading and simultaneously investing. So in his trading activities, he switched between bullishness and bearishness at will on both of those, Titan and DHFL. But it again illustrates this contradiction in the man.
Yeah, I think that's a really great way to put it, Neil. So as an investor, right? So since I haven't really tracked a lot of his trading bets, since I'm an investor myself, and I was more interested towards the investment side of it, right? As an investor, of course, the point that I'm going to talk about is something that I believe most of us relate to RJ on that front. So, two things, in fact, the number one thing was the ability to see very far in the future, to see the runway or the scope of the particular company or the sector. And number two was, of course, the conviction with which he held the stocks, right? Now, of course, if I have to talk about two examples, it would be Titan and DHFL. So, surprisingly, ironically, in both the cases, RJ saw the scope of the company. He had a lot of conviction. He hadn't really met the promoters before buying the stock, but he had met them after buying the stock, and he was quite bullish on both the stocks. But in the instance of Titan, it worked out really great for him, really exceptionally well for him. In fact, one third or one fourth of his net worth, one third or even greater than that of his net worth today comes from just Titan, right? And we all know what happened with DHFL. So, like Neil said, he was a man of contradiction, because he hadn't really done any research for both of these stocks. In fact, we write in the book as well, how Titan actually came to him. It was through a broker called Daki. So yeah, I mean, it also shows you the role of luck in your investment bets, right? Like Warren Buffett also very famously says that, if you have a portfolio of 10, 15 stocks, some of them are going to create exceptional wealth for you, some of them are going to go bust. And, we have a live example in front of us. Now, if I talk about conviction, RJ again, in a Capital Ideas conference, he had talked about his Titan position, and he had when he was questioned about his conviction on Titan, when 2008 happened, the stock halved. So Rakesh, Mr. Jhunjhunwala said that he had in fact bought more during that time. So that also shows his conviction on a particular company and the vision that he really subscribed to when he invests in a particular company. Now, coming to as a person, I mean, I believe that all of us knew him very well as a person, because he was quite unfiltered with his thoughts. He did what he liked. I still remember that very famous interview where he was chatting with I think some CNBC anchor, and while on air he called up his broker and he's like, "Ha, Kalpesh bej de." So that was That was quite a funny episode, but it actually gave you a sneak peek into into what kind of a person he was. And of course, we have seen a lot of videos of his, where he was really enjoying his life. I still remember that birthday video of his where he was on a wheelchair, but he was still having a good time. So I would say that he was a very jolly person. He was a very good person from all the instances that have been told before. He liked that everyone should make money. In fact, when Mr. Nilesh Shah had come to our book launch event in Bombay, he had talked about how he had donated money to a few students as well. He had supported a few causes as well. So definitely a very good person, a very conscious person, but at the same time, a person who was always unfiltered. He did not give a damn where he was, and he always spoke his mind.
Right. I've just muted everyone. Again, I think someone just by mistake got unmute. So I've again unmuted Neil, Aditya, and Aprajita. I'm also doing that for you. Okay. Yeah. So now I'll just ask a follow-up to Neil over here. So you mentioned about Rakesh also being RJ, also being a big bear, just like he was a big bull. He was also a big bear during the Harshad Mehta time. So I remember it's there in your book as well, where you mentioned that he was almost on the verge of bankruptcy during that time. However, his close friend Rakesh Damani denied that. So what is your views over here? Is Damani ji is right over here, or what you think is right? I was confused when I read that portion in your book. And I'm curious, and I'm sure many of us would be curious to know about that. Yeah, Neil.
Yeah, sorry, I had just unmuted. I had muted myself because there was some noise in my background.
Okay.
So you're right. It is difficult to piece together because the trades at that time, in fact, the trades at any time in his life were not really public. The way that his portfolio has been pieced together is because if you're holding in any company exceeds 1%, then your name comes in the list of shareholders. And that's how all of these websites put together people's portfolio. So there's no real authoritative way of figuring out just how close he was to bankruptcy in those crucial days. And so I think on the balance, you would have to take the word of somebody like Ramesh Damani, who has known him throughout the 90s and beyond. Happy for Aditya or Aprajita to add to that.
See, so we haven't spoken to Jhunjhunwala or the money, so we we cannot really comment on authenticity of it. But obviously, Rakesh Jhunjhunwala did go on record saying that had that episode continued for another 2-3 days, they would have definitely gone bankrupt. So it's on record by Rakesh Jhunjhunwala himself. So exactly, that is exactly what happened. And if that SBI receipt, the scam that Sucheta Dalal broke, had it not happened in April, they would have really lost it in the game, in bear versus bull fight that was going on. So that's what I believe.
Aditya, I've unmuted you. You may speak
Yeah,
now.
so I think I just wanted to add that itself, how that episode that was depicted in Scam 1992 as well, and that's about it. I mean,
I
nothing
think
else to add.
this is bad.
You mentioned, Prajita, that you have not met RJ and Damaniji. Of course, you cannot meet RJ now, but Damaniji also. So, whom did you meet personally for writing this?
We cannot. So people who went on record. So Shankar Sharma, Sameer Arora, and a couple of people who went off record. So I cannot name them. And then Ramesh Damani. We did not meet Radhakishan Damani, but we did meet Ramesh Damani. So these are and also Neil, can you recall any other who went on record about it? Sameer Arora, Rakesh. Yeah, so mostly
Yeah,
all people,
sorry, so
mostly
there is some confusion here, Ankit. I was talking about Ramesh Damani, not Radhakrishnan. Aprajita thought that we were talking about Radhakrishnan Damani, not so we didn't meet him. We met Ramesh Damani.
okay, okay, got it. Yeah, so Ramesh Damani we did meet, right?
Okay, great, great. So, so I'm assuming that you must have met a lot of other people also, but they have not.
Exactly. Brokers and dealers he worked with, ex-employees, yeah, his couple of friends who spoke to us off record. So some people from close circle did speak to us, but off record.
So now my next question is, what were your biggest struggles in the early journey of writing the book? Because I'm sure it would not be easy. So what was the most hard part?
So finding people, that is exactly, and we have been talking about it with the start of this session. So yeah, finding people to talk about him and sharing stories that are really not known. That was, at least for me, that was my biggest challenge.
Yeah, that, and also, as I said at the start, putting together the mass of information that's there about him. Right?
Mm. Collating it,
You have to
making
process.
it coherent, right?
Okay, great. So moving on to the next question. So even though I, being an investor ever since I started looking at the stock market, my favorite chapter from the book was risk management in trading, because I feel uh, it is that chapter is not just for traders but also for investors as well, right? So what is I would ask all three of you, what was your favorite chapter in the book?
So mine would be not the part three, not a chapter, but part three, which is the lessons that you can draw from him, what you should and should not follow. And why? Because ultimately, all of us read about finance, we look, we look at interviews, etc., because we want to make more money for ourselves. So, roughly, if I had to say what we should follow, with Rakesh, it is this inherent crazy optimism that he had about India. And it's easy to say, I mean, it's easy to sit here and say, oh, we can also be optimistic. But he was optimistic at times when there was no reason to be, like 2007, 8, like 2000, possibly, arguably 2013. There were moments in time when the picture could have gone either way, and he remained bullish. Of course, his optimism was not from day one of his career. It's not like he started in 1989 and day one he's all bullish. Like we discussed, he was bearish initially, but something clicked in his mind in 2002, 2003. That's when he acquired his big stakes in Titan, in Lupin, in Crisil, and he wrote an article in Economic Times setting out this hypothesis that why this is going to be India's big bull run, and he followed it up by actually going out and buying stocks in a big way. So there is that the big his optimism that people should follow. What you shouldn't follow obviously is leverage trading. Of course, not against trading per se, but leverage trading is inherently risky. As the recent SEBI report showed, 90% people don't make money from trading. So if you are trading, then you just have to be very, very, very good at it. Don't take it casually.
Right. Aditya, you want to add something? Your favorite?
So my favorite part would be the first part, of course, how it basically covers his journey on how he started and some of his early winners and how he really garnered that initial tidy sum, right? So I think that was so I usually love stories where how people really started his journey, how what was the initial struggle. So I think that's why part one is my favorite. And yeah, I think it also clears a lot of misconceptions that people have in the market. For instance, people say that he started with 5,000 rupees, but that's not really true. Of course, we cover we clear the misconception in the book. But any which ways, keeping that aside, it's a extremely stellar record that he has achieved. So yeah.
Right. So my next question is, as a diehard fan of both Rakesh Jhunjhunwala and Mr. Utpal Sheth, I was looking for some long discussion between RJ and Utpal Sheth on a few businesses they invested or rejected. That would have been like an icing on the cake for this lovely book. Your thoughts on why you didn't include something like that? Anything?
We tried to the extent of going to Utpal's
So,
office unannounced. मतलब वो cold calling वाला, cold visiting वाला चीज हमने किया. I mean,
yeah,
after,
he was.
yeah.
Neil, you must tell them that he was the very first person that we approached. The very first person.
Yeah, so that is what I was telling to Aditya also the other day, that the only thing which I thought was missing in the book was Mr. Utpal Sheth. Apart from that, it's a wonderful book, no doubt about it. So that was surprising. Now you have actually told me the reason why it has happened.
Right.
So I think now we can take some questions from the audience. Anyone in the audience, you can just raise your hand and let me know. I can just unmute you and you can ask your question, or maybe you can ask the question in the chat box if you want. I'll just check the chat box first. I think. Okay. No problem. So I think there are no questions as of now. So my next question would be, I have read the book cover to cover and I actually wrote a review also on our blog.
Thank you.
I hope you guys would have got some time to read that. And
Yeah, I read it.
I definitely, okay. And I definitely enjoyed reading it. And that is why we are having this session today. But if you have, say, 2-3 minutes or 4 minutes to speak to the audience who are watching you live here, or who will watch the recording later in the on YouTube, what will be your pitch for your book to this audience? One by one, maybe we can start with Neil.
Sure. So it very much depends on who you are. If you are new to the market, or if you haven't followed Rakesh's story very closely, this book is perfect. This book will tell you in a nutshell about his life, and it will then tell you about the big stocks, the big 3 winners in his portfolio, the big 3 losers in his portfolio, with a detailed analysis which Aditya has done. And in part 3, it will tell you what you yourself, what lessons you can take. Right? At the end of the day, why do we read? We read because we want to take something useful from it. And we have given that very neatly to you in part 3. If you are very conversant with RJ, if you followed him with every twist and turn, then maybe part 1 might not be super useful to you. But by all means, focus on part 2 and part 3. That is something that you might not have come across even if you followed Rakesh very closely.
Yeah. Aditya?
Yeah, I mean, see, my pitch for the book is that everyone should know about RJ, because he's India's greatest investor. He was a very good human being. We all should be extremely thankful that he was one of the most vocal investors as well, because he freely shared his knowledge, he shared his rationale. And it's not just that, like Neil had touched upon earlier, that he was a perma bull from the very beginning. He wasn't. In fact, there's a very old conference of his and Mr. Damani and a few other stalwart value investors, where he was quite vocal about India. He was openly criticizing the government, and he was just saying that what's happening in India, what should happen, and what kind of steps the government should take. And it was gradually over the years that his stance really changed to a extremely positive one. So my pitch is that you try to learn from India's greatest investor. What are the kind of stocks that he picked? What are the kind of stocks he lost money in? We purposely kept a chapter named that what you should not learn from RJ. So I think that's a very great chapter that we have also added. And I mean, that's about it. So I am a very big reader of books. Love reading books, and like I always say that that the knowledge that you gain never goes to waste. So it's not as if even if you're not a follower or a believer of RJ, that if you read the book, your time will go to waste. It's nothing like that. Markets are such that you should keep an open mind and you should try to learn from everyone. It's how you make yourself whole. You try to learn from everyone and you make something out of yourself. So that's my pitch for the book, and yeah, that's about it.
Thanks, Aditya. Aprajita, you can go now.
Yeah, so as Dilip Ora has just asked a question that can he ask his son to read this book? So that is exactly my pitch, that this book is meant for students and first-time investors. They should really definitely read it, and they'll find it quite easy to go about it, because all stock market book, those are really complicated. You start reading it, and not many people can handle all these books by great investors. So this book is in very simple language, catering to everyone. It's not just meant for stock market investors. So the Datini has commented that he or she did not find value in this book. A lot of information was already there. But I'll disagree a bit that there are some episodes, some examples, some anecdotes that are not there, that are not out there. So yeah, so everybody would find something great in this book, and it's not just a biography, it's not just an investment lesson book. It has everything, and most importantly, as Aditya also mentioned, that what not to learn from him. And a lot of people copy Rakesh Jhunjhunwala's portfolios, and this is not advisable at all. So what not to learn from him is again a very interesting chapter in the book. So that is my pitch. Yeah, it is meant for everybody.
Thank you so much, all three of you. So my next question is actually on the point which Aprajita just mentioned. I think it would be great if you can, what I also like about your book is that you made it a very balanced book. It's not that RJ is put on a pedestal and then everything is, whatever he's doing is right. So coming to the last chapter where you mentioned about what you should not learn from him. I would like you to throw some more light on that, because many of the audience might not have read that book or that portion of the book. So if you can educate them a little more, I think that would be very helpful.
Right. So one Neil had already talked about that. Don't go for leverage trading. So Rakesh Jhunjhunwala had that ability. He would do those mental calculations that below this level I cannot survive with debt. So he will liquidate his positions. And I think around 2002 or 2003, he did sell 25% of his portfolio because a lot of uncertainty were going around in the market, and he knew that he cannot survive with that huge amount of debt. So he liquidated 25% portfolio. So this is unique, and not many people can have that ability to get that right. So one, don't do leverage trading. Second, concentrated portfolio. So Aditya mentioned that 25% portfolio tighten. So but first time investors, if they are creating their portfolio and they have taken concentrated bets in any of the stock, then it may not work for them. So for Rakesh Jhunjhunwala, it could, but it may not be wise for first-time investors. So that is second thing. And third, small cap buyers. So Rakesh Jhunjhunwala would try finding out stocks which maybe a small cap stock which would turn mid cap and turn large cap, and that's how your multi-bagger returns you earn. So, but playing into small cap ideas for again first-time investors may not be wise, because obviously small cap companies, when they come out with their results, you cannot trust it. There could be different things, and you don't have access to management. Rakesh Jhunjhunwala had access to management, but normal people, normal retail investor will not have that. And for small cap companies, it's very important. Don't just believe numbers. You have to get into management's mind as well. So so these are three, and most importantly, health. Rakesh Jhunjhunwala did not care about his health. So for us, if we want to grow our wealth, if we want compounding to work for us, then you have to focus on your health. He died at the age of 64, but had he lived longer, then that compounding effect may have turned out even better. And we often compare him with Warren Buffett. So we could not have that in India on the part of Rakesh Jhunjhunwala. So we are unfortunate on that part. So yeah, stay healthy to make money.
So I'm glad that you added the health portion, because I was about to ask that question again to you. So Neil and Aditya, you want to add something? I think she has covered it really well, but if you want to add anything before I
think she covered it very well.
Yeah, so in fact, let me take up the next question, which is how did the three of us come together to write the book?
I just typed down.
I mean, that's the one-line answer. So I knew both of them for quite some time, and they have different areas of expertise. So Aprajita, as a financial journalist, she knows a lot of people in the stock market, a lot of brokers. She can talk to people and write a nice narrative. Aditya has great equity research skills. So he did that part of the book, part two, which is about analyzing the big successes and failures in RJ's portfolio.
So I just want to mention here that, like you had asked Ankitji that, what was one of the challenges that we had, right? So So for me, one of the challenges was that, to really write in a very book kind of a way. So as we all know that Neil and Aprajita are journalists and they write a lot. But for the real challenge for me was to really convert my thoughts to that kind of a language. And so before I wrote every chapter, I used to talk to both of them, and then I used to take their help. And of course, after writing, also I used to send it to them. They used to check it, they used to refine it. So they were really helpful on that front, and I'm very thankful that that they were there to handhold me in that process.
Thanks, Aditya. So I think we were discussing this, and uh, even Rakesh Jhunjhunwala used to say this in interviews as well, that even though he has made uh, bulk of his wealth through trading, at least in the initial years, he would still advocate common public to go for mutual fund. And this is what I believe is so underrated when we look at a figure like RJ, wherein we talk about his picks, we talk about the kind of wealth he has made, but he still recommends for a common man, and something which always happens in stock market and in other parts of life as well. We always look at the survivors, right? The kind of luck he had and the kind of leverage he played with so early in his career. So not many will come out alive with that kind of a strategy, right? But I think this message is still not well across the masses, because we still see a lot of, so anything you would want to say on this channel or in this session, which can reach to a larger audience?
Yeah, so I would say that there are two things that went in his favor which are no longer available to today's, even not, let's forget retail investor, right? Somebody's sophisticated, very interested, even for them it's not available. What are those? So number one, the Indian market in the late 90s, in the early 90s was immature. Immature in the sense that you could find out information, you could figure out things about companies that were not easily discovered. There weren't that many analysts tracking every single stock. There weren't that many mutual funds institutions in the market ready to take away any arbitrage that you had. The other thing is that if you look at the returns of equities, if you just divide them up in decades, so 1990s, 2000s, 2010s, you will find that every decade they've fallen. And it's not because there's something wrong with our economy or our market, it's just that it's matured. When an economy or a market matures, the reward for taking the risk of equity just comes down. So these two structural factors are no longer available to the ordinary Indian investors. The third thing is that, I mean, forget Rakesh, right? Even Warren Buffett very famously says that when he dies, his wife should be investing in an S&P 500 index fund. So it's something that is sound advice for most of us here. I mean, that I invest in mutual funds, right? So there's no reason for unless one is really good at picking stocks to go his way.
Right. So I see Samed raising his hand. So I'll just unmute him so that he can ask the question. Just give me a moment. I'll just unmute him. Yes, Samed, you can go ahead and ask your question. I've unmuted you.
So I ordered your book yesterday. So complete fact. By end of this month, I will definitely complete this book. So
Thanks, Amit.
I heard lots of interview of Rakesh Jhunjhunwala. तो बेसिकली उनके दो कोट्स मुझे सबसे अच्छे लगते हैं. वन इज worst of the mistake made in a best of the time, and second one is always take calculated risk and be courageous and bet big when gaming is your favor. Would you like to elaborate on those points, Neil sir?
So the first one you'll have to repeat for me. Second one, I think Aprajita is probably best place to take up. First one, can you repeat?
Samit, you have to repeat the first quote which you mentioned.
Worst of the mistake made in the best of the times. And second one is be courageous and bet big when gaming is your favor, and always take calculated risks. Would you like to elaborate on those 3 points?
So these are more about his trading, the time that he was very active in trading. I think Aprajita is probably better placed to answer that.
Yeah, so worst mistakes are made in best of the time. So that is exactly what happened post 2020. A lot of people got into trading and they started making money and they believe that they know this game, how stock market, how stocks are chosen, how to make money in stock market, etc. But obviously it did not happen. So post 2022 tech crash happened and we are all are aware what exactly, and SEBI came out with that.
Including Rakesh himself. So in the initial part of COVID, he panicked and he sold a
himself
lot of
sold.
stocks, and then he reversed his position. He said
Yeah,
so
and
publicly in an interview.
he was smart enough to reverse. So initially he did think that COVID is really a big crisis, something that has never happened. So he sold, I believe, 2% of his portfolio in March, in the beginning of when lockdown etc. happened. But obviously, then he made a lot of money during COVID. I think most money he made during those days. So worst mistakes are made in best of time. So when going is good, Warren Buffett का भी कुछ ऐसा similar quotation है. You know, when going is good, then everybody makes money, and then you figure out who was swimming naked. So whenever markets are going up, you need to understand that you may be lucky, which is why you are making money, whether it's your ability or just momentum, which is helping in your favor. So you need to be really critical about it. So critical evaluation of yourself. And second point, be courageous. And what was again? Be courageous and
Bet
take
big.
calculated, bet big, take calculated risk. So if you truly believe in any of your stock idea that this thing is really going to work out, then you have to take that risk. But obviously, that risk will have to be calculated. You cannot put all your money in one basket. You have to be calculated about it. So take calculated risk. By it, he means trading bets, leverage bets. He would know how much debt to take on which stock, and he would know when to sell. And and if he has made a mistake, then he will sell it off the same day. He will not wait for the stock to reverse the trend. If he feels that no momentum has turned against him, that he will sell the stock right then. So that is what he means by calculated risk. And be courageous and bet big. Bet big again, as I mentioned, that if you truly believe in one stock idea, if you truly believe in the merit of any asset class, then just go about it. Invest major portion of your portfolio in it.
Yeah, I'll just add one point. So as a trader, he was a momentum trader, and I think bulk of successful traders are momentum traders because you can't easily go against the grain of the market. As an investor, he was a value investor. So again, these two contradictions embodied in the same man.
Thanks, Amit, for asking the question. I hope you got the answers to your question. So, Neil, you talked about RJ being a momentum trader. So I heard that in his interview also, and I think I read that in your book as well. That and that is very, very, very unique. I think it is in the same chapter which I was talking about, risk management in trading, where he mentions that a good trader will have the most amount of money invested at the highest price. So
Yeah,
that is something which many people don't understand or are not meant to invest or trade like that. Right? That itself is a hallmark of a person like RJ. Right?
Yeah.
Because who knows what is the top, right?
Correct.
And the other part which Aprajita was mentioning regarding he reversed his stance. That is again one thing which most of us are unable to do. So that is why we should keep in mind when we are following someone like RJ, can we do that ourselves? I'm sure many of us will not be able to do that at all. So that is also something where we should keep a distance between us and RJ when we try to copy or completely follow on his footsteps, right?
Yeah, absolutely.
And now I think we have discussed a lot on book. Now I would want all three of you to share your experience as investors and what you would like, message you would like to give to the investing community, uh, not just in terms of investing in stock market, but also in terms of personal finance, because all three of you, especially Aprajita and Neil, you have been in the personal finance domain for a long time now. So it would be great to close the session or end the session having some thoughts on personal finance and investing.
Sure.
Yeah. So Neil, you can start. Yeah.
So I've made every mistake under the sun, and I would want everyone to learn from my mistakes. There was a time when I was trading and F&O, and I was losing money. So I've been through that phase. Um, there was a phase when I was redeeming my investments too early because I didn't understand. I was trying to play the short term. I was trying to time the market. Now, thankfully, I think I'm a little wiser. So I invest um, almost entirely in mutual funds, and that too just a few funds. So essentially, I invest in Parag Parikh FlexiCap for my equity allocation, and for my debt, I invest in conservative hybrid. Um, so that's been my journey. I hope that you guys don't have to go through these hoops and lose money, and you're able to directly start with a long-term horizon. So that's my journey in a nutshell.
Thank you, Neil. Aprajita, you may
Yeah.
share your.
Yeah, so I started investing in stock market through mutual funds right after I started earning. And thankfully, so from day one, I started covering financial space. So initially stock market and then moving to personal finance. So, and I'm very conservative with the way I spend my money. I don't take undue risk. So I have never made such mistake that investing in FNOs, etc. I've never done it. So I do something only when I understand quite a bit about it. So mutual funds, index funds, how they work, this idea really got to me that, okay, this is way too simple. And I believe this is the best way for anyone to start investing in market. And it has rewarded me. I started investing in index funds. I have been investing since 2014. And I have made more money than what Nifty did in that period, because I would invest some extra money on days when market crashes. So that's how I've built on my positions. So it has rewarded me. So I would advise everybody to please invest in Nifty index fund. Your large cap portfolio must go into Nifty index fund. If you don't have time to track stocks, if obviously if you do have time to track stocks, then go about it. And I used to write about stock market. So during day, as I was working on a digital desk. So if a stock movement happens, then I have to write about it and put it out, that story, quite quickly. So I won't have time to log in, that I would open my trading account and I would play that bet. I won't get that time, even though I know what to do. So for me, it made really great sense to start investing through mutual funds. And lately, I have built my stock portfolio as well. But I still, major part of my portfolio is still mutual funds, and lesser part of it individual stocks. And for debt, it's purely FDs. No debt mutual fund, it's purely FDs.
Thanks. Aditya, before moving to you, I'll just make one comment. Aprajita, you mentioned that I don't get it why people don't invest in mutual fund and why they don't invest in index fund when it is so powerful. I think there are two reasons. Number one is it is boring. People don't like boring things. They want adrenaline rush. They want something where they can thump their chest and announce to the friends or neighbors or maybe on social media that देखो ये stock लिया and it became a multi-bagger. So that is probably the main reason, and we blame the financial influencers that they are the
it's
reason
greed.
for this. But actually, it's greed. Not even greed. If you listen to Charlie Munger, it is envy. We can't stand other people making more money. So that is why it happens, maybe. Yeah, Aditya, sorry, I interrupted in between.
No problem at all. I mean, I'm quite different from Neil and Aprajit in the sense that I am very aggressive towards equities. I run a very concentrated portfolio. In fact, top two positions in my portfolio today are mid cap and small cap companies, accounting for over 50-60% of my portfolio. So I started investing in 2012. It was when I was a college student. We used to dabble in IPOs for extra pocket money. We used to pool our funds and we used to apply in IPOs. I still remember in 2015 when I got my first salary, I put it all in the Indigo IPO, and Indigo IPO opened with 30% premium. So I have taken way too many risks in the market, and when I look back today, I think that it was quite stupid of me because investing your whole salary in an IPO was just too much of a risk. But I had the thrill. I made good money. I burnt my hand sometimes, and I realized those mistakes. One more mistake that I did, and I really like to point it out was that when my first salary came, I put it all into equity like a Rambo. What I should have ideally done was create my emergency corpus, buy a health insurance. I always try to I always say that asset allocation is like your lunch thali. It should be balanced. आपके पास रोटी होनी चाहिए, दाल होनी चाहिए, सब्जी होनी चाहिए. It's not just आप पूरी पूरी lunch की थाली में दाल ही खा रहे हो सिर्फ, right? Which was what I did. ठीक है, कभी कभार कर सकते हो, that's fine, but not always. So yeah, I mean that was
आप दाल नहीं खा रहे थे, आप जलेबी खा रहे थे.
exactly.
Yeah, that is the right way of putting it, Neil.
So one mistake that I did was no proper asset allocation, but I really corrected those mistakes in the past 3-4 years. Now I have a health insurance, I have a term insurance, I have emergency corpus, I maintain a few other liquidity. I maintain another source of liquidity as well. Equity, maybe I'm trying to reduce my Rambo-ness by reducing that exposure. And I mean that's about it. Like Neil and Aprajita said, there are a lot of so I don't really like to say that okay, what I'm doing is the best thing, or this is the only thing that one can do in the market. There are various ways to make money in the market. Is just that I have a full-time equity research job, so I'm very well versed with equity research and equity stocks. That's why I do it. It works very well for me. But even I'm thinking that in the next 3 to 5 years, I'm going to reduce this exposure a lot, and I'll also try to shift towards say a bit of active and passive funds. I do have mutual funds in my portfolio, but the exposure is very less, because again, I like to research stocks and then buy into them myself. As an investor, as a person who does not really have time, index funds are the best way to play the markets. You invest so much time, you invest so much mental energy, you invest so much fees to fund managers, and sometimes you may not have all of that bandwidth with you. So you can just simply invest in Nifty 50 and Nifty Next 50. I think, like Aprajita said, she in fact tweeted about it, her performance, and it was really good because she beat the market by a good margin. So it's very simple. We investors try to look out for complex algorithms, but the best algorithm for you out there is the index fund. It's just that आपको ये करना होता है कि जब मार्केट गिरता है तो आपको ज्यादा इन्वेस्ट करना है, and that's about it. And बाकी the investments will take care of itself. You're betting on the market itself. और क्या चाहिए आपको, right? So if I have to summarize it, invest in those things that really work for you, that you understand. No need to get into really complex instruments and the likes of it. Keep it very simple, please. अगर आपको नहीं समझ में आ रहा है तो don't get into it. And please have a long-term view like RJ had on the country. He was a Parma bull. He was like the mutual fund sahi hai campaign ka brand ambassador before the campaign was even there. So yeah, I mean keep the faith, stay invested and be positive. जब market गिरता है तो आप ज़्यादा invest करो. And yeah, I mean that's it from my side.
Fantastic, Aditya. Really liked hearing to your journey and how you have summed it up. So we still have 5 minutes, and I see 2 hands being raised. I think we can take these 2 questions, right? So Meet, I'm unmuting you. You may ask your question first.
Ankit bhai, how are you?
Good. Thank you so much for joining.
Aditya bhai is looking very smart.
Thank you, Mithai. आपसे सीख रहा है बस.
नहीं. Okay, so thanks for giving me the opportunity, and congratulations to all the authors. And Ankit bhai, thanks once again for bringing something very fresh to the table for investors like us. So the book covers many hidden aspects about RJ. One of the most standout part and learning for me from the book and RJ is that you need 3 things to make money in market. It's courage, conviction, and concentration. He has the vision to see, courage to buy, and patience to hold. It's all about nazar, sabr, and jigar. Look, few people might say RJ is lucky that he got Titan early on in his career. What if अगर RJ को Titan नहीं मिला होता तो क्या वो RJ होता? My learning is like RJ might be lucky to have found Titan earlier on in his life, but holding Titan for decades through such volatility is something called superpower. I mean, that's a very differentiated, trait of RJ that we all need to learn. So thank you very much. Well written book, simple and easy to understand. And Aditya bhai, my cheeky and our locho is still pending, huh?
Absolutely, Ved bhai.
Okay. Thank you, Ankit bhai. Looking forward to your session on 20th of this month in Surat as well. So cheers, guys.
Yeah.
And thank you,
Thank you
Mr.
so
for
much.
this comment. It's very insightful. I mean, the way you put it, yeah.
Thank you, guys. Cheers.
Thank you. Thank you so much, Meet bhai. I think Kaushik raised his hand, but I don't see Kaushik now. Okay. So I think that is it about it. Thank you so much, Neil, Aprajita, and Aditya for agreeing to do this. And I and our members of Mission Smile wish a lot of success to your book. And just as a disclaimer, this is not a paid event. We have not done any kind of, there is no arrangement between the authors of the book. And because nowadays we have to be very clear with these kind of disclosures. I read the book on my own. I really enjoyed the book, and I thought that it was good to have the authors of the book on our channel so that new investors in our community can learn a lot from them. So thank you so much, Aditya, Aprajita, and Neil. Any last comment before leaving us?
No, I just want to say thank you so much for having us. It's a privilege being here. And I encourage everyone to pick up a copy of the book. There's lots to learn. It's probably the most inspiring story in our markets in our time.
And I will say that start gifting this book to others, because it's our responsibility to make others to also start investing in stock market. So start gifting this book to children, to college goers, or even your friends who are not so much into stock market.
So I just want to thank everyone. Thank you, Ankit ji. Thank you, Smart Sync Services. And like Aprajita said, this book is just a way to celebrate the greatest investor of India. It's really criminal that there hasn't been any kind of content on him. So we are extremely honored and lucky that we got the chance to do it. And all of us have the responsibility now to spread the word and just spread the legend of Rakesh Jhunjhunwala. So yeah, thank you.
Thank you so much, Neil, Aprajita, and Aditya, and thank you so much all the members of Mission Smile and other participants who joined the session today. We'll keep the recording, and the recording will be up on our Mission Smile platform maybe by tomorrow, and the edited version of the interview will be live on our YouTube channel by maybe the weekend. So thank you so much, everyone. Have a nice weekday, and thank you once again.
Thank you all for
Bye.
tuning in. Good night.
Thank you.